This analysis was written by Bloomberg Intelligence analysts Amira, Waziri and Elchin Mammadov. It appeared first on the Bloomberg Terminal. The power sector in Africa is set for rapid growth in the coming years, fueled by overseas investment and debt financing. The evolving fuel mix, made up of renewables and conventional power, should rid the continent of outages and high tariffs, once fully implemented. However, significant infrastructure development is required to cope with the pace of expansion. 1. Europe's private equity funds crank up African power. Africa is set to be an area of focus for private equity and infrastructure funds through 2019, though the region historically secured financing from development banks. West Africa seems to be the area of greatest interest, with the economic downturn resulting from low oil prices hitting West Africa, and Nigeria in particular. Companies impacted. Actis Capital is an emerging market pioneer and involved in Ghana's 225-megawatt Ayetepo wind project, after taking over Uganda's main private power distribution and supply company, UMIM, in March 2005. AIIM and Helios are among other private equity investors in West Africa. Norway's Norfund plans to develop hydro and solar power plants in Rwanda and Mozambique. 2. Bond issuance doubles as debt funds. Power sector bond issuance in sub-Saharan Africa more than doubled to $14.4 billion in 2017, based on World Bank data, as political tensions eased and economic growth started to accelerate. The rapid bond market expansion is being fueled by demand from yield-hungry overseas investors. A significant portion of sovereign, corporate and green bonds were issued to finance power industry developments and recovery programs, including Ghana, Nigeria's Ministry of Power, Uganda's UMIM and South Africa's Eskom. South Africa, Ivory Coast, Nigeria, Kenya and Senegal were among those countries issuing euro-denominated bonds, while others such as Ghana led local currency bond transactions. 3. African auctions are dominated by solar PV. Africa is taking advantage of high solar intensity, with utility-scale PV capacity paced to surge 181% by 2019, based on BNEF estimates. This is despite currency, fire and political risk in the region. The majority of new capacity will be procured via competitive bidding processes such as the World Bank's Scaling Solar Auction Program in Senegal, Ethiopia, Madagascar and Zambia, where EDF and Enel are bidders. The operation takes advantage of falling technology costs, faster time to EBITDA and guarantees long-term price certainty. All announced renewable auctions in Africa for 2018 are for solar PV. NG12 solar PV projects in Senegal worth 60 megawatts in the Electricity Sector Regulation Commission's (CRSC) tender in late 2017. Morocco is planning initial tenders for the 800 megawatts Nor PV2 project this year. 4. Russia-China venture into African nuclear. Russia's Rosatom and the Chinese government are taking on nuclear generation investments in several African countries in search of growth opportunities beyond mature EU markets. The projects vary across countries, from already existing nuclear capacity such as South Africa's, to new market entrants including Tanzania and Sudan, yet the majority have low probability of execution. South Africa's nuclear operations have faced resistance after a provincial court ruled against building a plant, citing inadequate procedures taken by the government. Nigeria has signed a deal with Rosatom, with construction set to begin in 2019. Sudan, Uganda and Zambia have signed a memorandum of understanding with Rosatom for peaceful nuclear energy usage, while new plant construction in Niger and Kenya is set to begin in the mid to late 2020s. 5. power capacity potential outshines Africa's demand. Sub-Saharan Africa has a huge potential to achieve about 1.2 terawatts of power capacity, excluding solar, which has virtually unlimited potential, according to a report by McKinsey. Gas will continue to be the dominant fuel across the continent, with the majority of reserves untapped, while coal will remain a staple in southern Africa. Onshore wind and hydro will also play key roles in the renewables front. From a primary energy point of view, the trend of one or two sources dominating the energy mix, hydropower in the Democratic Republic of Congo and coal in Botswana, for example, is likely to continue. Eastern and Southern Africa are the key markets in primary energy capacity, with only Mauritania and Nigeria and West Africa having over 30 gigawatts of installed capacity each. 6 grids take gloss off Africa's capacity additions. The continent-wide trend of increasing power generation capacity via obsolescent grid infrastructure can be observed in several countries across Africa. As a result, the investment focus is shifting to strengthening grid infrastructure from adding capacity. Nigeria, Ghana and Uganda are among those countries having received financing to expand their grids, to prevent bottlenecks hindering operational efficiency.